Okay, hello, how's it going? Well, as usual, long time no see. This time I will not promise that this is going to change. Apparently, this is the mode that we operate on this YouTube channel here. I can make videos when I find the time, and sometimes I just don't have the time. But I wanted to record a quick video for you and explain a bit how we prepared Parqet for the current market situation. As you know, the market went down quite a bit this year, and Parqet is a tool for retail investors. So if the market goes down, that is basically the worst thing that can happen to a tool like ours, because the sentiment goes down, especially in Germany, where the let's say the retail investor scene is not that big, and people basically stop investing. And we are seeing this. So there are a lot of dangers in, let's say, the current market climate for a business like Parqet. And we saw this starting in the beginning of the year, and we did some steps in order to combat that or to hedge against that. And I wanted to make a quick video for you to explain that because I think the results are quite good. I'm not saying that all the results are the result of what we did, but I'm sure it helped, and there was for sure a little bit of luck involved. So a few statistics so you know what I'm talking about. Since the beginning of the year, so year to date, Parqet revenue grew 115%. The churn of Parqet is at the lowest point in its history, and the lifetime value, so how much money does one customer spend with Parqet, is at the highest value ever. So these are pretty amazing stats, and I'm a little bit surprised by them too. I just looked at them yesterday and found this, and then I took some, I reflected a little bit on all the things that we did this year, all the things that we plan to do in order to hedge against the market downturn. And I thought it might help. It might help you with your SaaS business, or if you think about starting one, what at least we thought about. And some of that, again, I'm sure it helped, but not all of these great stats, at least in my book, can be attributed to that. So let's get into it. First, in the beginning of the year, we looked at, okay, what are the biggest dangers for us as a business? Like, what's the worst thing that could happen? And what do we see on the horizon that is happening? So one is, of course, high churn. That means our paying subscribers stop their subscription because they don't invest anymore, or they slow down with their spending. In general, reduce the amount of subscriptions they have, etc. So that's churn, right? We are losing paying subscribers. Then low signups. So new users sign-ups slow down because not a lot of people are looking to get into investing or look for a tool that helps them with investing, like we saw during the COVID years, for example, to 2020 and 2021. Then we saw a lot of influencers or creators in the fintech space, in the finance space, who stopped. They basically stopped creating content. They stopped being an influencer. That is due to companies in the fintech space, like brokers and others, reduce their ad spend. They reduce the amount they pay to influencers, and influencers basically lost a lot of revenue they got with affiliate programs and ads and things like that. So because there was no more money involved that they can earn with it, or a lot less, some of them simply stopped. And they were one of our main drivers to make Parqet, to bring Parqet to new users. So that is also pretty dangerous. And then, of course, low user acquisition in general. That is tightly, that is very tightly connected to user signups, of course, right? Like, what channels do we have for user acquisition, and does this go down? So we saw users deleting their account and when users delete their account at Parqet, they always give a reason for it, or they have to give a reason in order to close the account. And a lot of them wrote, I stopped investing, which is really, really sad. We are not in the business of educating, at least not like like for example Finanzfluss is or something, but that is an education issue, I think, because the market downturn is not a reason to stop. I think actually it's a reason to start or at least continue. I think these are the best the best times to invest, especially if your time horizon is like 20 years, 30 years. We also saw more competition arising with VC funding. So even if like VC deals went down a little bit and there were not that much new VC deals, and the companies that have venture capital, they were forced to pivot a little bit into a revenue generating mode instead of growth at all costs. But at least in our space, there were a lot of new companies and they all got VC funds. So they had a lot more money than we do. And they start out in this market climate. I'm not sure if starting out in this market climate is a positive or negative. I personally think it's a negative, but I don't know. Like I can't be sure about that. But yeah, we saw a lot of competition emerging, and with their funding, they can of course do a lot more marketing than we can, right? A lot more ads. So that is dangerous to our business as well, simply because they can gain a lot of mind share compared to us. So what steps did we take to combat this? First of all, for the first time, we invested in marketing. So the first 2 years of Parqet / Tresor One, I basically did no marketing, at least not in a sense that I spent a lot of money on it. We had a small affiliate program, but there we only spend money if we earn money. So it's a revenue share model basically. So that is not a big investment or spend. It's just when our revenue grows, we pay a few of that to the influencers and creators that helped create that revenue. And so we had this before, but we didn't have anything else. So we started investing in marketing because we wanted to control a user acquisition funnel ourselves, at least one, ideally multiple. How often influencers shared Parqet or showed Parqet in their Insta stories or on YouTube, etc. We took no influence on that. We never asked creators to do something. They did this on their own. Some used Parqet quite heavily, others barely. So this is not something we really controlled. And looking at influencers stopping business basically was of course a danger. And we relied a little bit on the sentiment of creators. As I said, this was a lot of growth for us in the past, but it was not something we actively were able to control. So we wanted to do a bit more. First thing I did was hire 2 people in marketing. One person who does a lot of email marketing, search engine optimization, data stuff, and the other person content, social media, etc. You will see if you look at, for example, our Instagram channel or LinkedIn, that you will see a lot more content in the past few weeks and months than in the previous half of the year or even last year. So it's a lot more content there. So we hired 2 people in marketing. We started our first steps into paid ads, also the first time. We never did an ad anywhere. So we are dabbling with this. It's still in the beginning phases. We are testing a lot of things out, like copywriting, what keywords we do, what the positioning and etc. All of that to find the way where we have a positive return on invest. Because if we have a positive return on invest, we can crank up the money that we put in. So we are testing there. It looks good, but it's not at a point where I would say, okay, let's throw 10K, 20K, 50K into it. So paid ads are another thing that we started. Search engine optimization is something that we also started actively doing before that. So in the beginning of the year, we had like 16 20 indexed pages. Like the web app, the Parqet portfolio tracking web app was basically a single page app. So there was barely content that was indexable. Just our normal website was indexable and some stuff of the community. So we didn't really have a lot of Google traffic for keywords, but we had a lot of Google traffic for searching for Parqet. A lot of competitors also book ads on that because, yeah, if someone searches for Parqet, they are obviously interested in portfolio tracking or our tool specifically. So we had Google traffic for Parqet, but we didn't have any Google traffic for any other keywords like real-time quote from Apple or when does Tesla pay a dividend, things like that, right? These are obviously keywords that we will not rank on because they are highly competitive. But yeah, we started our search engine optimization strategy. And now, compared to the 16 pages that were indexed with Google, let's say beginning of the year, we now have 19,000 pages indexed. So we put a lot of content out, and we basically made it so that Google can index it. It's a bit a technical thing, but anyways, most of you that did search engine optimization in the past will know what I'm talking about. But you basically have to make your site available to Google, so Google can index the content, read the content. And of course, there was a lot of search engine optimization done on the website itself. That search engine optimization is not a short-term measure. It's definitely a long-term thing. So we don't expect this year to see a lot of results in that, but that's a long-term thing. So it slowly builds up over time. And we do see the first results. So we see it's working and it's happening. But of course, it's not an acquisition channel that does has any bigger impact right now, at least. But it's something for the future, and we better start early than too late. We will create more pages for Google to index. It's not necessarily only for Google. These are obviously pages that provide value to the user, but we do it in a way that they not only are on Parqet already and go to these pages to use them, but they can also find them by searching something in Google. And that is how we can get new users, new traffic to our sites. Excuse me. I recently put out a tweet and asked if, because I do all my videos one shot and no editing, nothing. So you will see things like that and whatever. And I asked if people, if I should do more editing or not. So please leave a comment below with your thoughts. Should I continue just rolling the camera and doing the video without editing, or should I do more editing and faster pace and things like that? Okay, what else did we do? We thought about, okay, if our churn increases, for example, if we lose monthly recurring revenue, we should we can hedge a little bit against that by moving the revenue that we generate from a user to the beginning. And how do we do that? You do that with yearly subscriptions instead of monthly subscriptions. So with a monthly subscription, a user pays, in our case, €8 a month, and we have to convince them basically every month to renew the subscription. Now, our lifetime revenue is higher than 1 year worth of subscriptions, but if it's lower, let's say the lifetime value would be 6 months. So the average paying customer only stays for 6 months, then it would be really beneficial to put the user into a yearly subscription, because in this case you would earn almost double. Usually it's discounted, but anyways, you would earn 12 months worth of revenue or 10 months worth of revenue instead of 6. So this would be highly beneficial, and you only have to convince the customer once per year to renew. Our lifetime value of the customer is higher than a year. So we could do a bet on monthly subscriptions will usually, or on average, stay longer. But still, it was beneficial in this case to push many of our monthly subscriptions that are active, that are ongoing for many months, to ask them to switch to a yearly subscription. And we did exactly that. We told the customers, hey, you will get a discount if you switch to a yearly subscription, and we have better planning on the health of our business if you switch to yearly subscriptions. So a lot of monthly subscribers switched, and that means we had a lot of revenue in a few months that would have gone into the company later. So this gave us a lot of runway, right? This gave us a little bit more security to have a bigger balance on the bank account to weather the storm of the market downturn, especially in H2, in the second half of the year, and maybe even next year. Let's see how it's going. So pushing users or asking them to go into a yearly subscription instead of a monthly subscription helped us get revenue earlier and have like a war chest for the things to come. It helps us better planning, because we know these customers, they will stay for the next 12 months. And we don't have to convince them every single month to renew, even if they start to struggle a bit on the markets, if their portfolio is in the red, if they question if they should continue investing. They have the account for at least 12 months, and we can help them hopefully overcome also their fears and start again or pick up again where they left off next year, hopefully when the market recovers. I don't know if the market will recover, but I sure hope so for a lot of investors. Or what's even better is if we continue to have a bit of a sell-off and can buy early, but we can help the customers and the users see that this is an opportunity and not a something to flee the market, to exit the market. That is, of course, if you have a longer time horizon in investing. If you are in retirement and you need to liquidate to live off of your investments, then of course this is a completely different issue. But most of our users, they have a long time horizon. Yearly subscriptions. What we also did is narrowing down our positioning. So we looked closely at who are our paying customers, who is paying for a tool like this, who are they, what is the amount that they can invest, where are they hanging out online, what do they usually do. So we created basically a customer segment that is ideal for us, and we focused on that. So we looked at where do they hang out, how can we target them, how can we make them happier, what is their wish from a tool like this, like specifically from them. What are the features they want? What are the functions, the usability, etc. And how do they like being talked to? From a copywriting perspective, etc. So we looked at all of that and narrowed our positioning a little bit down in the direction of these folks, because again, they are funding mainly our operations, so we need more of them, right? If you look at different customer segments and you see one of the customer segments, 70% of those use your paid product and not the free product, and for every other segment it's lower. Then of course you want to double that segment. You want to get more people of them, because your conversion rate of 70% is much, much higher. So there's also what we did, also something we did and still do. We also looked at our roadmap. What do we have on our roadmap? What do we want to do? What are users asking for? And we looked on the high impact initiatives towards our goals, and that means more marketing, basically better user acquisition that we control. It means the high impact features that get users either to start subscribing, stay subscribed, or become more engaged in the application. I don't want to talk about specific features that we did there, because some of them we did already in the beginning of the year, some of them we are currently or we just recently released, and some of them we are still doing. And I know these videos are watched by our competition as well, so I don't want to give away what is coming there, but we basically classified, I mean, we do this all the time, looking at the projects and initiatives that have, like, how much impact do they have. But in this case, we specifically looked on revenue, MRR, churn, like these health metrics for our company that we can survive the market downturn. And we looked at what initiatives help us bridge that. Focused on them. That doesn't mean we didn't do other things or smaller things. Of course we did. We actually shipped quite a lot of things this year, and in the last 2 months there is still some awesome things to come. But yeah, so that was also something that we did. I have three more things that we did. We got really close with our community, as weird as this sounds, but it is something that I think we as a business, we are in this together with our community, right? We get money from them to build a product that they value, that they use, that helps them in their investing journey. So it's a symbiotic relationship. We earn money to be able to do this continuously. So we always worked on Parqet very close with the community. We have the feature voting, we have the community, the bigger community, and we have our YouTube channel now where we do live streams on the Parqet YouTube channel, youtube.com/Parqet, German live streams where we basically talk, where I talk to the community and answer every question. I show them what we are working on. I show them sneak peeks, what is coming. I look at portfolios. I have guests on, like influential people from the fintech space, etc. So this is a fantastic way to connect to the community, and even like we do one-on-one support by now. Like every email that comes in, we are answering and helping our users out. Really dedicated. And we get a lot of positive feedback from that. And I even take some phone calls every now and then. So there are some people that call me for customer support, and I'm helping them as well, of course. Now, excuse me a second. Still recovering from a very long sickness, over 3 weeks. What else did we do? We opened up our affiliate program. I told you in the beginning we had a small affiliate program. We were very selective who we let into the affiliate program, and we opened that up a little bit. So we still look a lot at the creators and the content, the influencers and the content creators, what they do, and does it match with our values and how we want to be perceived. So we will never partner with someone who promotes scams or, things like that. But there are a lot more creators out there that create awesome, helpful content for the community. So we opened up our affiliate program and onboarded a lot more creators to help us expand our reach and to help them generating a new revenue stream, a recurring revenue stream for that matter, that helps them, do their thing. We also transformed Parqet, and I will be a bit vague here again due to specific people watching, but we transformed Parqet from a passive tool to an active tool, to a proactive tool. That means that instead of waiting for users to decide they want to look into their portfolio, we got a little bit more proactive and bringing the information proactively to our users. So they are continuously informed if they choose to enable this kind of stuff, and we bring them more actively to Parqet, to our tool. So it should increase engagement, it should reduce churn and things like that. At least these are our assumptions, but this is ongoing. So we will see how this plays out. And yeah, these are quite a few things. We planned them in the beginning of the year. We did most of them, and some stuff is still happening. So we have quite a few more things in the pipeline, like partnerships and diversifying our income streams. So we are not 100% reliant on the current subscriptions, but there are a lot more opportunities to create different revenue streams, even maybe a different product that creates additional revenue. But yeah, so a lot more things are in the pipeline, and I think currently, I don't want to suggest that we are able to conquer the market downturn or whatever, but at least currently I'm pretty happy with the results. I'm happy with how it's going. We are growing every month. We're not growing as fast as I would like. Like, I would like to have double-digit growth every month, like 10%, 12%, 15%. But it went down, of course, but we are still above 5% every month. 5%, 7%, sometimes 10 or 12. But yeah, as long as we are growing, that's of course a good thing, but the whole team is pushing to get that higher and higher. And I think the initiatives that we are taking now, in order to basically bridge the market downturn, survive the market downturn, growing during the market downturn, these initiatives will accelerate our growth when the market goes up again. So I'm 100% convinced of that, that the initiatives that we do now, even though they are hard to do, we basically run against the wind or against windmills, I think is the saying. As soon as the market turns, the windmills stop, we can run even faster with these initiatives. So I consider them necessary to our survival and an investment into much bigger future growth. So I hope this was helpful. How long are we recording now? Oh, almost half an hour. So I hope this got you, first of all, a little bit of insight into how I started this and think about this kind of stuff, but also hopefully it helps you with your product and business, because I know a lot of businesses, especially in SaaS, are struggling this year. And yeah, I hope you are able to survive this and come out of this market with full swing. And leave me a comment how it's going. Like, did you lose revenue in your business? Did you lose, or did you lose growth? Did growth slowed? Did growth went negative? Like, that would be the worst case scenario. How is it going? Do you have a big cash account and you can survive that with your cash on hand? I'm really, really interested how other founders are doing currently and what they do to prepare and to tackle this. So leave a comment or hit me up on Twitter. I would love to hear from you and talk to you. And I hope the next video doesn't take that long, but can't promise anything. Either way, I'm looking forward to see you in the next video, and have a great day. Bye.